Okay, guys, welcome back to the best stock and crypto podcast on YouTube. This is the Stonk CEOs podcast, episode 5, I believe, and we have a very special guest today, Austin Hankwitz. He's been doing a lot this past year. Let's see, he was a previous financial analyst in Nashville, Tennessee, and then he decided to leave his position and he became an advisor for Wolf Financial, the Griffin app, Finery, Stan, and he's also co-founder of a business too, the Wits business he founded this year, and he also just started his own podcast called Exposed Wealth with King Bach. So how are we doing, Austin? How are you doing today?
Dude, that was quite the intro. I appreciate that, man. I'm good. I'm good. I'm feeling good. Yeah, that was a hell of an intro. I don't think if anyone's ever introed me like so well like that. That was sick.
Yeah, I did some research. All the boys did research today for you. So
No, I appreciate it. Yeah, I'd be happy to walk you through sort of like what's been going on in my life over the last 2 years or so, right? So to make sure like I guess everyone has context, I'm 25 years old. I graduated from University of Tennessee back in 2018 with a degree in finance and economics. I took that degree to go do mergers and acquisitions for a publicly traded healthcare company here in Nashville called Amedisys. Um, was doing that for 3 years or so, but loved what Graham Stephan, Andre Jick, Meet Kevin, these absolute rock stars were doing on YouTube. Thought like, how hard could it be to like do my own thing on YouTube? Turns out it's really fucking hard. So I tried to film some videos, post some. Production quality was not the same. Scripting, editing, it just wasn't the same. And so I decided that YouTube probably wasn't going to be the route to take as a creator that wants to like build in this finance space. And so then I began to lean into the question of like, well, what platform is out there that allows people to just use their cell phones, right, to record on? And that was TikTok at the time. It still is TikTok. And so I was thinking, it's March of 2020, pandemic's rolling. Everyone's talking about the stock market crash. Like, let me also kind of lean into this, everyone's talking about stocks right now type of mentality. And so I was thinking, well, beyond that, like, what is a really like hot topic that people love to hear about? Just like a word that's passive income. And so I took that thought and I was like, let me figure out a way where I can introduce the stock market, passive income, and all these other different sort of like keywords to an audience so like potentially goes viral as possible in the shortest amount of time. And so I made a video talking about SPHD, which is a ETF that contains the S&P 500's highest dividend yielding companies on an annualized basis, and just throws in the ETF. It's yielding like 3.5, 4%, nothing too crazy, but I mean, passive income, right? And so what I did was I took that and I said, hey, if you buy, one share of this for $30 a month for like the next like 40 fucking years, you're gonna have all this money passive income. Like just kind of like really explain to people like what the concept of dividends are, cash payments to you, and all these cool things. Loved it. Got like 1 million views in 2 days, and was able to leverage that into a awesome opportunity to quit my job and do some really, really fun stuff with a lot of cool people like yourselves.
Awesome, man. So what did you do before all this huge adventure that you've been on?
Did y'all? I caught major echo. I didn't even hear what the question was. I'm so sorry.
It's all good.
yeah, he asked, what did you do before you became a content creator and was pursuing like entrepreneurship full time?
Gotcha. Yeah. So, damn, that's a good question. Well, I mean, like way back when, I was always really into entrepreneurship, right? So, like when I was in, even in, I think in fourth grade, I got called to the principal's office because my dad every weekend would give me like $2 in quarters to go to the gas station with him. Because he would like go grab these lottery tickets, and he's like, "Yo, here's 4 quarters or whatever the fuck, 8 quarters. Go get some out the claw machine." So like I'd snack some stuff out the claw machine, take it to my third, fourth grade class, and flip it to them for like $3 for this like plush animal or like a fake watch or some shit. And so I've always been like I had that mentality. Like for example, in I think it was eighth grade, I was like snow. I lived in Denver, Colorado at the time, and so I was snow blowing driveways. And my friends like, "Yo, let's go like sled and like do all this dope shit." I'm like, no, like my family's got a snowblower. I'm gonna go make $200, like knocking on doors for the day. Like that's what I was doing. And so I've always had that sort of entrepreneurship mentality. But I guess out of college after I graduated, when I was working at a Medisys, I didn't really understand, or I guess know per se what I wanted that to look like. In college specifically, it was a lot of cleaning car headlights. So I was all about, there was this, I'm gonna post a video on it soon, but you can go to Amazon and buy the Sylvania headlight restoration kit for 19.99, and this will clean 2 cars' headlights, so 4 total headlights, which you can charge $40 a car, and now you turn $20 into $80. You know, 20 to go buy another kit, and you just keep doing that with your money. I made like $2,000 one summer in college doing that. Like I love that shit,
Wow.
and I was able to figure out a way to not only make money through creating content as like in the sense of investing and showing people how I'm investing, like obviously what you guys are doing as well, but like also just making a whole business around it and then redeploying that capital back into other cool fintech companies like Stan, like Griffin, like all these other awesome companies we've invested into over the last 12 to 18 months, to make sure that they can also enable other creators to do something similar.
Yeah, so like back to like you being a content creator, whatever. I was on TikTok before, like when as COVID was starting and everything. And Austin came on my For You page, and I think it was a video of him talking about like Disney, like why you should buy Disney.
Dude, that was
And
a
I was on
while
TikTok for probably
ago.
like 2 months at the time, posting like weird videos on my channel. Like I was doing some NBA edits. I was like drinking with friends, like whatever it was, like some like it wasn't a niche at all. And I was just like inspired by Austin. I started following him. He had I think like 100,000 followers at the time. Now you're over 500,000. But you are literally the reason why I decided to pursue like my first business with Alex, the Stonk CEOs. Just from seeing your content, I was like, damn, like he's getting a lot of views doing this. Like he's providing a lot of value. There's not a lot of value right now on TikTok. Everything seems saturated right now, and people are just consuming, but they're not consuming like any sort of quality content. So I just thought that there was an opportunity for Alex and I, and then we just went with it. And now we have the Stonk CEOs Discord, over 15,000 members. And we're getting into YouTube, we're getting into Twitch, we're getting into all these other different outlets now. But like Austin, dude, like you were literally the person that like wanted me to do this. Like I just
Dude, that
wanted to
is
know
so
that.
fucking humbling, man. I really appreciate that. Like, it's like full circle. I mean, like whatever I posted that make you guys want to start, and now like you guys are doing this incredible podcast with awesome people. Now I can be a guest on that. Like that's just sick. That's wild, man. I appreciate it, and I'm here to support in any way I possibly can.
I think that's something about being a creator like on TikTok is, that experience of affecting someone's life like that. I think that's the drive that you have, at least for me, that's kind of like the drive that I have towards all these people. Not only to help them in finances and stuff like that, but just to get it in their mind and aware of those things around you. I think that's something that will really impact your own life as a creator and help you to just keep going with that drive that you have to help those people. I think it's really cool.
No, I totally agree, and I think what's wild is like there's nothing more insane than obviously like right now what the words that John just shared. But I mean, getting DMs on Instagram or TikTok or even Patreon of like, yo, I thought this, but because you did this, it changed my life, or like it just changed my mentality, or like I'm now able to, like, for example, I mean, I made a video about how anyone can retire a millionaire by investing towards a Roth IRA, something I've been doing with Betterment for several years now. But I ended up funding like 40,000 accounts for like Betterment, which means like 40,000 people now are also investing toward retirement. If that means whatever the amount, or I don't even know what percent of people are still doing that, but it's like that's 40,000 fucking people who would have not opened any sort of like retirement account at that point in time in their lives if they didn't see that video. And that to me just like blows my mind. I'm just super humbled.
Yeah, that's
So
awesome.
Austin, there's a lot of people that watch this that are like very young, like very new in terms of like the creator scene. If you had a word of advice for anyone that's beginning their creating content journey, what would it be?
Dude, it would be so one person comes to mind immediately of someone who's crushing it as a creator that's new and who is um I say this with kindness, but uneducated, right? And that's Kayla Kilbride. That's Girls Talk Stocks. I'm not sure if you guys know who that is, but it's she's blonde. She makes really cool, funny content.
Yeah,
Anyway,
she's awesome.
but she got a degree, I think, in like sociology, maybe. Like she has nothing to do with finance and economics or accounting or anything like that. But she wants to teach people what she's learning in such a way that's understandable and digestible, especially from the perspective of someone who doesn't have that experience or the accolades that come with, like I have a degree, like she doesn't, right? And so, sharing her perspective in real time is valuable. But for anyone starting to create content, I think coming from a place of transparency and humility, saying, obviously, I guess if you work at like JP Morgan or Goldman Sachs, or you're an IB or PE or whatever, like lean into that. Sure, like you can say whatever the fuck you want. Like you have the accolades and the experience to do that. But if you are a creator who maybe doesn't come from that type of experience or background, but you want to learn in public, right? I think that's like the key sort of phrase there, that if you're a creator, and you can lean into that, you'll be successful. As I want to learn in public, I want to document my experience, my wins, my losses, what matters to me, sort of what this process has been like. And I think just coming from transparency and value added context, and wanting to just do right with people, because it's amazing, dude. TikTok has this incredible ability to smell bullshit from a mile away. And so if you come from a place, if it's on TikTok or YouTube or Twitter, whatever, but if you come from a place of, I want to provide value and I want to learn in public, and I'm just starting like let's like do this from the perspective of like, don't judge me for my wins or my losses, but just like follow along on my journey. Any creator can be successful.
Yeah, I totally agree. I think it's really interesting how TikTok is the audience itself is so young. So even with people like you, or I also graduated with a finance degree, we are like very new to the workforce itself. So compared to someone that like worked in IB for what, like a decade, it's like
Yeah.
nothing compared to it. So us sharing our journey is more relatable to these individuals watching than like anything any of these big guys like these hedge funds could say.
Dude, what's wild though about TikTok is like, yes, you're right. It's tons of young people, but it's blown my fucking mind the amount of people who are not young. For example, I was just in New York City to meet with John, the CEO and co-founder of Stan. And we were sitting down with a friend from Index Ventures and a bunch of other cool people at this dinner. And we were sort of explaining like what it's sort of like a let's all meet each other for the first time deal. I didn't know some people there, they didn't know me. And so like I was like trying to explain what I did on TikTok. And one of the girls there, she's like, "Oh, cool, like yeah, that's awesome. Like whatever, I'll follow your Instagram." And she followed my Instagram, but she saw that her like the executive director, her boss's boss at JP Morgan followed my Instagram. And he's like 58. And I'm just like,
No way.
what? Yeah. She's like, wait, why does my boss's boss follow you on Instagram? I'm like, what are you talking about? And she's like, no, this guy's like in his like late 50s and follows your stuff. Like, this is so weird. So like, I agree. Very young demographic, but on the same token, it just depends on like what that content is. Dude, it'll be way like it's interesting, man.
Yeah, you have those real like American heroes on TikTok. Like you got Dave Portnoy, obviously, but have you seen Rick Raheem? He's like 70, and he's just like on TikTok, like pushing his crypto bot or whatever, and like he's just like spreading wisdom about like his experiences in the workforce. You got Nima, another guy, but yeah, there's quite a few old people, but it's mainly just like 15 to 30-year-olds. But just to like quickly change the topic, I wanted to really talk to you, Austin, about your venture capital activities that you've been getting into, and I just want to know like as someone who maybe wants to get into some startups or be an angel investor of some sort as I continue to grow my portfolio, how do you like go about that? Like, where do you start? Like, did you have money saved and like were you planning on getting into venture capital, or was it just connections that you've made and people reached out to you? Like, how did your beginning with venture capitalists just like
Yeah,
start?
happy to talk about that. So, full transparency, both equity in these companies have been gifted toward me as well as invested into them. And there's only two of the one, two, three, four, five, six, seven companies. So two out of those seven, equity was gifted, and five of the seven I had written a check. Um, so how it all starts is, well, let's talk about that, like the entire idea for a second, right? So at its core, a company is looking for not only having, some sort of awesome product to offer and sell to a target audience, but also a voice, a brand, I mean, think about it. Apple or Tim Cook? Tim Cook has 3 times as many followers on LinkedIn as Apple, right? It's like it just people resonate more with people than they do with brands. And I think now that startups, especially how fast and nimble they are, but I think now companies and people are beginning to realize that creators are very valuable in the sense of storytelling, and especially if the creator uses the product and has been using the product for a while, they can share their experience with their audience, and if it aligns with their audience's goals and what the audience is trying to accomplish, which if you're going to partner with a company, then it should align with your audience's goals. But anyway, then that's value added for both parties, right? And so how I got involved with this is I guess one of the first big ones that you guys probably know about is Finery. So if you guys aren't familiar, Finery is, imagine them as a Discord for investing. So as you guys have your own Discord chat right now, you have 15,000 people in there, and you guys are talking about stocks in real time and things of that nature. Imagine if you guys were able to then also, whenever you talk about a stock, drop in like the little cash tag like you can on Twitter, and then it pulls up information about the stock's market cap, the revenue projections, the reported earnings, the stock price, all that fun stuff, and then also shows you how many people in the chat own that stock, or the last time that stock was talked about. So it's like adding this more of like these tools and productivity tools, I guess, around talking about investing, right? So that's Finery. So what they did was they saw me on TikTok. They realized I was crushing it, and like, hey, this guy would be awesome for sort of heading up a community on our platform, which I was desperately looking for one. And so they cold emailed me actually, like, hey, we're a couple guys from Harvard and MIT. We're starting this really cool product. Would love to get your feedback on it. We're about to go through the Y Combinator process and apply for that. We'll let you know if we get in. But yeah, let us know. So they gave me the pitch deck. I thought it was an incredible platform, really, really cool. Could see myself using it. And so I ended up saying like, yeah, like happy to talk more about this. Let me know how YC goes and we'll be in contact. This was August of last year. They got accepted to YC. Everything went well. YC gave them 100, I think it's like 125,000 at a $1.8 million valuation. And I was like, yo, that's dope. Y Combinator, as you guys know, is awesome. They invested into Coinbase and DoorDash and Uber and all these cool companies, like literally in their seed rounds. I was like, I'm gonna do the same. And so I was able to sort of not just be like this angel investor, and this is the same arrangement in all of these. It's like I'm not just this guy that writes a check. I'm more of like a strategic partner where it comes like, okay, I'm not only wanting to invest in you guys because I believe in this product, but I would love to not only use the product, but also introduce it to my audience, give you guys candid feedback on what they think, on what I think as a creator, what I want to do as someone who's trying to build community around talking about investing in personal finance and things of that nature. And so, for example, twice a week for the last 7 months, I've been meeting with their head of product, and we've been talking through what I would want to see as a creator, what they should be focused on from a roadmap perspective, what they should be executing on, on a timely manner. It's not just like let me write a check and like see you later. It's like let me write a check so I can have the ability to sit down with you guys and mold this product into what I think it would look like best to both provide value to myself as a creator and my audience. And so Finery, obviously, they did their cool stuff with Y Combinator. Upfront Ventures, the largest VC firm. It's like a massive, I mean, they were Chime, they're Goat, they're Ring, all these really cool companies over in, as well as Rally Road over in Los Angeles. They invested $3.5 million into Finery at a $20 million valuation. And then off to the races. And Finery's app launches August 1st. So be on the lookout for that. Happy to have you guys on the platform. We'll definitely give you guys as much say and having some say in what the product could look like and things like that. But it's just, at the end of the day, it's how do we get involved in not just helping people create and build, because like at the end of the day, like they've already hired 4 people. Like that's sick. That's 4 people now that have jobs because this guy had a cool idea. And so at the end of the day, it's like how, as a creator, do you get in venture capital? You understand what you have, both from what I can provide value from, and also, I guess, around like I did have some liquidity, so I was able to write a check. But I think they accepted the money not because of we need his money, but more of like I'm gonna do this guy a favor to make sure if he is, meeting with us twice a week, he's giving us his candid feedback. He's gonna have skin in the game if we end up exiting for whatever in the future. And so that was, I think, the second company that I had really worked with like that, and now it's up to it's 7.
Wow.
Yeah,
Yeah, that was a great, well said answer to that. But yeah, so if you guys are out there and you're entrepreneurs and you want to eventually get into venture capital, definitely rewatch that and listen to it. Wise
Definitely
words from
want
Austin.
to.
But
I appreciate it,
when
man.
you started like everything
So,
on TikTok, the first thing that you monetized yourself, I believe, was Patreon. So
yeah.
is that I haven't signed up for your Patreon or anything like that, but is it just strictly your long-term investing? Like, are you only a long-term investor, or do you do trading as well? Because I know we have a Discord, like Josh is a day trader. Caleb dabbles between trading, swing trading, and then I think he also does leverage crypto trading. But are you solely a long-term investor in equities, and is that how you first monetize yourself, or
Yeah,
any other?
so really good question, man. So as it relates specifically to the Patreon. So what happened was, I'm posting these videos on TikTok back about a year and a half ago, and people are excited about them. Like, this is cool, but dude, you've got 60 seconds to explain yourself. Like, can you add more context around your assumptions, around the investor relations reports, around the transcripts? Like, give, excuse me, give me more. I'm like, all right, sweet. So how can I do that in such a way that's, I believe that information's free. And if I wasn't publishing it on Patreon, someone's going to go find it somewhere else for free. And so that's why 80 to 85% of the content I publish on my Patreon is completely free. Every stock pitch, I've got 38 of them up there. Every single one is free. Read it. As you guys, I think you mentioned Clear Secure before we were talking about this. You read the whole stock pitch and it was free because I think my ideas are worth exactly what you pay for them, which is nothing. Make your own conclusions, make your own assumptions, figure it out for yourself. I'm just over here sharing my thoughts. So Patreon for me was a place to share my thoughts at scale with as many people that wanted to, I guess, see what they were, as well as say, hey, if you do want to know what I'm doing with this information, right? Information's free. But if you want to know what I'm doing with the information, then toss your boy $9 a month or $4 a month or $17 a month. And I'll be happy to talk you through my ideas and how I'm executing on this information. And so that was access to my portfolio, seeing what I'm doing. That's my weekly top stock ideas, which are a lot to do with earnings catalyst or maybe just looking around like reopening trades or things of that nature. And then also live streams. So every Sunday for probably the last like 4 or 5 months, I sit down with about 75 people and we just have a live stream. And I talk for about an hour and a half about, what happened in the markets that week, what we're looking at for next week. Did any earnings for our because we have about 50 or so portfolio companies in our portfolio. So did any earnings? Was anything announced of that? I mean, doing Q&A, right, for a good 45 minutes there as well. It's pretty engaging. And because of the incredible support I've had on Patreon, that was the catalyst to allow me to quit my job back in March of 2021, so just a couple months ago, and do this full time. And I'm forever grateful and indebted to every patron that ever gave me a cent. And I hope that not only did they get their money's back worth that 17, $4, or $9, or maybe $0, but I hope they multiplied that by exponential amounts in the markets or in knowledge or time saved or whatever. And so I guess at the end of the day, it's like monetizing as a creator is very interesting. And that's sort of what Stan is doing. John who's building Stan, that's what Stan is doing to try and fix, right? So right now as a creator, it's a mix between being a human billboard by selling ad space on your feed to, whatever companies that want to buy it, while also trying to convince them that you should that your audience should pay you money for an ebook or a course or a membership or something. And so leaning away from being a human billboard to now enabling creators and giving them the tools and features and productivity tools or whatever to make the best content to sell for membership. If that's an ebook, if that's a course, if that's a texting service, if that's an email newsletter, if that's, what Finery is doing with all these awesome integrations and plugins and whatever, we want creators to feel like they have every resource necessary to monetize their audience in such a way that provides value to them. So they can give them 4, 9, 12, $18 a month. And at the end of the day, that's, in my opinion, where all this is going. I think that, yes, advertising and brand integrations are really important. And I do them plenty on Patreon, but and TikTok and other places. But at the end of the day, it comes down to, are you providing value to your audience in a way that is like meaningful one-on-one transaction versus let me try and sell you on signing up for Earnest or signing up for something else.
Awesome. So what you were saying with what was that company? I'm sorry, that you were talking about, that creator platform.
Stan.
Stan. Okay, so you can link Patreon with Stan. Is that correct?
Yeah, so imagine Stan as a mix between a Linktree as well as a Shopify. So just how Shopify took sort of 17 different tools, if that's Stripe integration, if that's the ability to do e-commerce on a website, if that's fulfillment, if that's email marketing, if that's SEO. They took all these cool different things, packaged it into one product for $29 a month, and now anyone can make their own website. Stan's doing that for creators. So they're saying, through us, you can have a texting service, you can do a membership, you can do an email community, you can do the mobile focused courses. You can do an ebook. You can do all these cool different things that you previously would have to go on 9 different platforms and send your users to all these different websites to sign up for and do. It's now just on one single platform. But so how I integrate Patreon is it's just like a link at the top of my stand. Yeah. So it pushes them over to Patreon, but eventually Patreon will be non-existent and my sort of ecosystem and all of that will live inside of Stan. In full disclosure, I invested in Stan. I own equity in the company, but obviously because I believe in what they're doing and I plan to use it myself.
Yeah, fair.
Yeah, so Stan, John, great guy. I don't know if you're familiar with Invest with Russ, but he was the person that put me on to Stan, and then I think you gave me a little recommendation as well. But I got on a Zoom call with Russ and the CEO, John. And yeah, Alex, we are fully connected with Stan, and we have our membership, our classroom, all our different YouTube links, the podcast, everything's on that one link in the TikTok bio, all our other social medias. And it's honestly a great platform. And I know Austin, you used to do like the one-on-one coaching sessions where you can just monetize yourself for like an hour out of your time, and that's just like another way where you can just like monetize yourself. And that's the goal for John. I believe he wants all these creators that are creating content to just find ways to make money and generate value, and then funnel their community to their other business avenues that they're doing. And it's just a great platform in my opinion, and it completely differentiates themselves from Linktree, like you were saying, because of that monetization feature that they offer. And it's kind of like the Shopify Linktree combined. But I just have one more question for you until we get into the second half of this podcast, and it's just simply, how do you manage your time, dude? Like, you do so much. How do you just manage your time?
I got a time box. Yeah, so all of my things to do it's like a brain dump right here. I then do the top 3 things I have to do today, and then I manage every 30-minute interval from about 7:38 in the morning to about midnight every single day, and it's all through the time box.
Now, do you do that at nighttime, like a nightly planning kind of thing for the next day?
Yeah, yeah, exactly right. So I have like a running Google Doc. So as you guys maybe you guys don't know this, but I'm not a one-man team. Christian Blackwell is my co-founder, COO, operator, whatever you want to call him. But he is this rock star person who is just, imagine like an executive assistant on steroids. I mean, like, this guy does everything with me. He's incredible. And he also owns equity in every company that we own. Like, he's my guy. And so, but yeah, so I convinced him to quit his job doing management consulting in New York for PwC back in January, to come work for me, and we've been working together full time since about February. But what he does is we primarily, a lot of stuff, what he does for me is he helps me manage my time. And so he's got tons and tons of running lists of everything we're involved in, which is a Google Doc of like 15 pages. And so then we take that, we prioritize it 1 to whatever as to like what we need to be doing on that, like the next day or that next week. If it's meetings, if it's projects, if it's content, if it's whatever. And then we take that information, drop it into my Amazon purchased time boxes, and I manage it out on a 30-minute basis every day, and try and get as much done as possible. And that's the secret. There's no real secret, man. It's just working your face off, unfortunately. I think the real secret is not sleeping. I feel like at 25 years old. Yeah, I know, I'm drinking a Red Bull right now. So yeah. But no, I think not sleeping was what really helped me figure out. Like, so when I was working M&A at a Medisys, like, I would be doing that from 8 in the morning to probably about 6 o'clock, 7 o'clock at night. And then from like that 8 or 9 o'clock to 2 in the morning is when I was building my stuff. And then so it was about 6 hours of sleep for the first like 9 months, like making sure that I could do both of these things in a proper manner where they don't fire me, right? Where I wasn't underperforming, but also growing on my own personal brand. So then I had the opportunity to like make that major switch. And now it's 6 hours. I try and get a good 7 or 8, but it's 8 in the morning to about midnight every single day. And, have a meal and 2, and I maybe take like an hour off to kind of decompress here and there, like go on a walk or cook and stuff. But I mean, it's full steam ahead, dude, every single day. And I think that coming from the perspective of wanting to do that, knowing that I have a finite, Josh here, he says he's 33. I would argue that because he has a family and kids, he probably doesn't have the opportunity to grind out on these hours, right? He has to go home and say, hey, I got to spend time with my kids. I got to spend time with my wife. I've got to cook some food or pick them up from soccer practice, whatever it looks like. I have the incredible privilege and luxury of being 25, being able to grind my face off for the next 4 to 5 years so I can do as much as I possibly can. And so that comes with no sleep and time boxes and lots of Red Bull.
See, you mentioned the kids and whatnot, and that's actually how we end up having kids is because I did that when I was your age. I grinded, I did
Yeah.
the time boxes, I did my schedules throughout the day, exactly like you just explained it, and that was literally so I could have kids. We could afford to have kids, and I could still be comfortable with income, be able to day trade and things of that nature. So it's kind of it still correlates. I might be a little bit older, I might be an older cat, but I did all that stuff and I still do it. I just don't do it so my time boxes are more of I trade on these hours, I study on these hours, and then I spend time with my kids on these hours, right?
100%.
So I mix the family in there. So, but that is a good way to manage your time.
For sure.
But so Austin, you've been grinding for so long. You obviously at one point probably got burnt out and like got into a deep rut. It maybe not, but if that happened to you at one point, how did you get out of that rut?
Dude, it's a
And give me
really
advice
good
for anyone
fucking
still.
question. So I've figured out that the best way for me to do this is I can go on about a 4 to 5 month sprint where I can just face down, keep going, and just really get into it. But I said 4 or 5 months, I just feel like dog shit for about 2 or 3 weeks, and it's like my brain doesn't comprehend. I don't want to talk to anybody, like because like having a community is a lot. As you guys know, like it's people to talk to. It's coming every day with a happy face and saying, "Hey, let me get in front of a camera and show people like you can build wealth through personal finance and investing, like whatever it looks like, right?"
Okay, so Austin, you've been grinding from 8 in the morning till midnight for the last like 5 years, right? So obviously you step
Not
into a
like
rut
that,
at some
but something
point.
like that, yeah.
Obviously, at some point you're gonna get into a rut. So how do you get out of that rut per se? And do you have any tips for people that are trying to create content and that they do slip from that rut eventually?
Yeah, totally. Dude, it's yeah, being burnt out as a creator it happens a lot. And for me, I think I found that I get burnt out every like 4 to 5 months. And so how I try and work is I work in sprints. And if that's I guess I'm trying to say is like I try and have very clear like deliverables and like check the boxes. I just showed you guys the time box, right? I try and have like, okay, let me work in this sprint and like do this for like 2 weeks, or this sprint's gonna take me 3 weeks or whatever, and to like try and get that done. Because that helps me feel like yes, burnout's a thing, but I'm sort of accomplishing something throughout that burnout. Or not throughout the burnout, I guess just to prevent the burnout. I feel like I'm accomplishing something. But so how do I get out of ruts? Um, it's a good question, man. Like it's hard. I think what's important is to realize that at the end of the day, as a creator, your audience is never gonna like just get up and go. It doesn't matter if you're not posting for a week or 2 weeks or whatever, like they're still gonna be there, they still support you. They might wonder where you're at, but they recognize that, you are creating content for them on a daily, if not twice daily basis, for free. And that comes with that is some time for personal health. And what helps me a lot is getting outside, seeing my friends, go getting some wings and beers and chocolate cake and having all the fun stuff that people like to do and splurge on. Um, as well as just like you guys probably don't think this, but I'm definitely like an introvert. Like I'm an extroverted introvert. So it's like I recharge by being by myself. And if that's like just being by myself, like watching some YouTube videos or TikToks, just like listening to music or a movie, like whatever, but like not having to interact with people and just like being with myself like 2 or 3 days, like that's how I like get back on my game. And so just being self-aware enough to like know how you recharge is really important. So for any creator that's like thinking that they're getting burnt out or like worried about burnout or even experiencing burnout right now, just know that your audience isn't going to leave you. So like take as much time as you want. Think about how, before you were a creator, what made you feel good, what made you feel as if like there's a reason to get up and go to work, or a reason to like just get up and be excited. If it's your friends, if it's food, if it's just whatever that looks like, lean into that and take your time and know that you're not alone, and that I'm me and I've experienced it several times, and every other creator is. And if you want to talk about it, shoot me a DM. I'd be happy to share my experience with burnout and help you overcome yours.
That's awesome. Thank you. That's some great tips right there.
For sure.
That's a good answer. But we're gonna switch the conversation a little bit to talk about market sentiment. We're gonna switch over to equities because that at the end of the day is what this podcast is. But so recently in the markets, we're at all-time highs. SPY's continuing to consolidate around this area. I think it's around 430 right now. But there is a specific niche of companies that are lagging a lot more than the rest of the market, and that is Chinese companies. These big tech giants like Tencent, DiDi, Alibaba, and I just want to talk about that, guys. There's a lot of articles coming out recently about how DiDi's main app has been removed from the Tencent WeChat messaging, and it's more so of this thing where I believe that at the end of the day, the reasoning behind it has to do with power, and that's just like the Chinese government, how they're moving their own tech companies and all that, and they believe that it's just like the government reminding them that these powerful tech companies, like who's really in charge, the Chinese government or these big tech companies that are taking over China's like economy. So I just want to talk about that and have an open conversation with everyone. I know Caleb's been doing a lot of research on this. Josh said that he can talk about China for about an hour, but what are you guys' thoughts on what's going on right now with these tech giants?
I'll let Caleb go on this one. I want to hear what he has to say.
Go for it. I'll do like a brief intro here, but it's very interesting right now because if you look at like fair value stocks, that's why I do long-term portfolio. I always invest in something that's like undervalued hypothetically. Across the board, every single one of these stocks is undervalued, and there's a reason why. There's obviously a clear political risk, but on top of it, there's also the VIE risk. If you guys don't know what that is, JD, Nio, Tencent, all these like stocks are listed not necessarily over the counter, but they're listed by a VIE, which means that it's a theoretical paper note. So you're not really buying stock of the company. You're buying like a hypothetical stock sold from the Bahamas of the company. So there's a lot of risk associated with these stocks to start off with. But it's very interesting right now because we're trying to look at something like JD or Baba through an American lens. We're trying to look at the revenues of this company, the net income, the cash flows, everything that's generating right now, and be like, oh, that's comparable to Amazon, right? But in the end, it's not, because it's a completely different political system. And it's very important to consider that. And for me, that's why I always discount every time I'm doing DCF for any of these companies and from China. I have to discount it by 30% regardless of what's going on, just due to that political risk inherently. And that's how you can see right now. We're getting to the point where JD for me is 40% below fair value. Baba is 50%, Tencent's like 30. So we're getting to the point where that political risk is getting to the certain juncture where it's like, oh, maybe I'm considering investing in these companies. And to be fair, like the revenues are crazy. It looks like Tencent, it's growing at like 50% CAGR on revenues for almost 10 years straight. That's like unheard of. And obviously you got to consider, like I was saying earlier, in a different context, because China is completely different than that of the US. But for me, as long as the management is like buddy with the government and don't step out of line, like somebody similar to like the CEO of Baba or like DiDi, which is idiotic for not getting regulations for like permits or like working in a city, as long as you're competent enough to do that and understand that the Chinese government is always going to be in charge, I don't think it's as risky as people are leading it on to be for all these stocks.
I totally agree with that, Caleb. Like almost 100%. Like I think we all knew that Chinese companies, well, it's communism, right? So the government 100% is going to be involved with every single one of these companies, not just in regulation, but they're going to be directly involved with the board of directors all the way down to their finances. From the start of every one of these companies. And I think what happened was a lot of these companies started blowing up. American companies started investing money. Institutions started investing more and more money. The Chinese government saw this and it was like, you know what, let's dump some of this American money out of these companies by, quote unquote, regulating them a little bit more and putting more stricter guidelines on them being traded on the New York Stock Exchange. And I think it was a little bit by the government, Chinese government, a bit of a smoke screen in order to get some of the United States and other governments' money out of the Chinese stocks. So I don't think, that being said, I don't think they're that much of a risk investing long-term in these companies, especially if you do your due diligence. I personally, out of a couple of those companies you mentioned, maybe JD.com would be my only long-term investment. I don't like the work ethics or the company ethics behind like Baba and a couple of the other ones. So I won't get into that on this podcast, but I wouldn't see a reason why you wouldn't invest a little bit of long-term money in any of these. I think it's just a little bit of a pullback on these Chinese markets. Maybe wait a month 3 weeks, maybe wait till heck, maybe even wait till after September. September is usually a little bit of a bear month, a lot of bit of a bear month. Maybe hit them in November for long-term investment, wait for some of this to go over. But I honestly think a lot of it's the government just doing it for a little bit of show, to get some of the American money and other countries' money out of their stocks. But that's just my
See,
thought.
I respect the absolute shit out of both of those opinions. And I think that there's absolutely money to be made in the Chinese markets. But as a person who invests for the long term and tries not to like, I think I try to treat my investment portfolio with my stocks as like, I don't have to check it on a daily basis. I don't need to follow the news because like if something happens, like I'm fucked, like I lose all my money. Like I'm super like, let me buy Home Depot because I know people are still gonna be buying like lawnmowers and barbecues. You know what I'm saying? Like let me go buy Pepsi because I know like people are buying, Frito-Lay chips. Like and that's not gonna stop. Right. It's like that's sort of like the type of mentality I have for 80% of my portfolio. And I'm the type of guy that's like, I feel like there's more stress and there's more time to focus that's taking me away from other things in my day if I buy these Chinese stocks because like as you guys talk about, the government comes in, swoops up some stupid shit, and DiDi's now down 50% or whatever the number is in a day, right? Like I don't want to figure out that risk. And so personally, I'm not investing in these Chinese companies, not saying that there's money to be made. There's absolutely money to be made. I just don't know enough and don't have the time to like follow them meticulously to know when to like, oh, now's a good time to get out. Like, oh shit, Chinese doing this. I got to move over here. I got to pivot. I got to, whatever. I just don't have the time and energy to do that. So like, it's not my forte, my cup of tea. On the same token, too, it's like, how can we as Americans understand what being consumers and customers of some of these products are if we can't even imagine them they're in China, right? So like DiDi, for example, like how can I even begin to imagine what kind of company DiDi is, or even like Alibaba? I never bought from Alibaba. I'm sure you guys might have with the drop shipping thing back in the day, but like how can you
jerseys.
yeah, jerseys.
Okay.
But I guess what I'm saying is like it's so hard to imagine just I can easily imagine Apple and Target and Dollar General or Walmart or Costco because like that like number one question I get is like Austin, what stocks do I buy? And the answer is always buy stocks that you know and you're a consumer of, right? You shop at Costco, go get stock in Costco. You have an Apple iPhone, go own Apple. You use an Amazon account, you can Netflix, whatever, same deal. And so it's like I can say those things with confidence because I understand as a consumer what that looks like, but it's so hard for me to wrap my mind around these Chinese companies. Like I stay away, but again, there's money to be had, and if you're making money, always hats off to people making money.
We'll look at
So
like
this
when
is
you
my
just
broad perspective on like the entire situation with China as a whole. So obviously, like you were saying, there's a lot of risk, a lot of political risk involved with these Chinese companies, but there's also a lot of growth potential for them as well. You can capitalize on that. But I have the understanding at least that I genuinely believe that we are currently seeing an empire shift right now. I think that this decade, maybe the next 5 years, we are going to see China, if it hasn't already, transfer and become the number one world economy in the world because they're better situated right now. The US is just continuing to print this stupid amount of money right now, and the US dollar is just losing so much more influence. And I think that China's going to become the number one world economy. But with all this political risk with these big tech companies, is there any better way us as young investors that can take on the risk, expose ourselves into into an investment where we can benefit immensely from this empire shift from China? Like I want to be exposed into China, but I don't know if it's Alibaba, DiDi, JD, Nio. I like Nio. I'm investing into Nio, but like, what's like the best investment that we could put our money into where we would benefit from this empire shift?
The best investment would probably be like you said, I'm not a huge fan of it, but probably Neo, just because we've seen what Tesla did in the United States once they started selling abroad. And Neo is, China's just in China alone, they sell more cars just in that country than the whole all of the world combined, just in China. So yeah, Neo would probably be a good one. But I'm going to go back to what Austin kind of said about like you don't really know what these companies are doing on the day-to-day basis because you're not really that much of a consumer in the same continent even as them. Because I'll take a look at like Baba. So the president and CEO of Baba goes missing, gets kidnapped, something happens to him for weeks on end, and that goddamn stock went to the moon. Like the guy goes missing. The guy that runs the company goes missing for weeks. Nobody's heard from him. The stock keeps going up. He comes back and is found and supposedly didn't get picked up by the government. I'm not going to say he did or didn't. And the stock tanks. Like, how does that make any sense? If that happened in America, that would not have happened. If Tim Cook went missing for several weeks, Apple would tank into the low 90s, 80s. It would fall off a cliff. It wouldn't go to the moon because the CEO president goes missing. So that like right then and there kind of gave me a little bit of shuddering for these Chinese stocks. I kind of get what you're saying, John, about the world economy. I think they've been there. I think hiddenly, whatever word you want to use, they've been the number one superpower on the economic side, the military side, and everything for probably 2 decades now, if not longer. It's just not, people aren't printing it. The United States isn't printing it. The UK is not printing it because nobody wants to give up their number one, number two status on that. But I think you're totally right on that. So on the flip side, yes, I think there is a lot of good stocks to invest in China long term if you're going to want to play that route. And I think Nio is actually probably one of the best ones. It's one of my top on my watch list, but I'm not ready to invest long term in it yet. But I think that will be.
Yeah,
I
in
want
regards
to
to
touch on a
equities,
few
I would
things that were
definitely say,
mentioned.
I'll just go first. It's just really quick, and then you can say your point. But I definitely think Neo, because they have that backing by the government, so like that's very significant for Neo. But I'm like kind of leaning towards like I think that like not directly investing into China. Like my opinion is I just think Web 3.0 as a whole is going to be the best investment or hedge towards this like empire shift, and that's like your crypto, for instance, not specifically Web 3.0, but VeChain, because they have that Chinese government partnership. But then you can also look at your Aave, your GRT, the Graph, companies like that, maybe ICP, but probably not because they're doing way too much. But these different blockchain crypto projects that are going to be playing a significant role with this Web 3.0 transition, I feel like that is what you want to put your money into, in my opinion. Because I just genuinely don't know where I would feel safe putting my money into these Chinese companies, because I could wake up one morning, like Austin's saying, and it could be down 50% because of just one FUD headline from their government. But you can continue what you're saying, Caleb.
Yeah, no, I totally agree with that. I was going to kind of just readdress that entire long-term thing. So my perspective right now on the Chinese market isn't that you should dump your entire portfolio or even half or even like a large portion. What I'm saying is that long-term, I don't know if you should section off even a lot of it. I think maybe like 5% should be devoted to maybe like the MSCI like index, the spider index for China. But beyond that, I do think there is significant political risk. And long term, if we're talking like actual long term, like 20, 30 years, we don't know where these stocks are going to be. It's not like Home Depot or Disney where it's like, oh, I can hold that for like half a century and like Disney's going to be a great company. Like JD, like sure, they have like the best supply chain structure of any company in China right now with their warehouses and everything. But where is that going to be in 20, 30 years from now? I think in terms of that, you are better off to invest in something like a Mercado Libre or like a Coupang than that of JD if you're looking for a long-term investment in itself. That does not to say, though, that if you're young like me, I'm like 21 years old, I'm going to invest in these companies in the same sense that what Li Lu did back in Russia, if you guys know about that story, where he bought stock options from these Russian workers on these oil tycoon companies because they had no clue what they were selling. And he bought them for a huge discount premium and made a shit ton of money as a result. And obviously, it's a completely different story, but that's what I'm equating it to it here is that when there is high amounts of risk, if you do your due diligence and you have high conviction, you can make a shit ton of money as a result. And if you do have that high conviction in Chinese companies, you can make a shit ton of money as a result. But there is that long-term risk. And I think the huge risk comes from the fact that the Chinese government doesn't want outside investment. They don't want foreign investment directly from capitalist countries because it's going to cause the regime shift that John's talking about. But it's not just we're becoming the dominant power. It's becoming there's outside influence from capitalist countries that are going to influence our entire country at large and cause the collapse of the Chinese economy. So what I'm saying is like a long background way of saying this, but I think you should invest in China, especially if you're young. But you should also be incredibly cautious. And I'd say it's better to buy an index where it's something like a global X, where it's like a Chinese company such as like Nio, JD, Baba, all combined in one, where you can just like buy it and let it sit there, than that of like individual companies and stocks like that.
Yeah, I think the risk, just going off of what you said, Caleb, I think there is a lot of risk associated with these Chinese companies that is going on. Me and John actually watched a video of what the Chinese government is doing. And it's kind of scary to think about what they're doing. And they're buying or they're loaning out all this money to these African countries or wherever it is. I'm not sure exactly. I can't remember. Huh?
I was just like,
Oh, you're muted.
I'm just,
But
Yeah.
go ahead.
no,
No, I was just gonna say it's crazy.
Oh, it's crazy. Yeah. So yeah, all these freaking Chinese companies and just the Chinese government in general is loaning out all this money, and these countries can't pay back that money. So in a way, they're just slowly taking over all these countries, which is insanely scary to me. So I think that's what they're doing. They're trying to manipulate the markets, and it's interesting that all these companies that are kind of tanking and just staying stagnant, they're all listed on the NYSE. So they're kind of just sticking it to the man in a way, trying to send a message to the US that, they're in charge. So that's something that I'm kind of worried about and being cautious of investing in these type of companies and, really keeping my eye on the news, because honestly, that's the only way that we can see how these companies are doing is through the media, which is also another risk to take on because you have to believe in what the media is saying.
Alex, I think what you're referring to, it's called the New Silk Road essentially. But what China is doing, essentially what they're doing is creating this passageway from China itself through the South Chinese Sea, around the Indian Ocean, through Africa, then through the canal into Europe and stuff like that. And they're trying to reconnect the entire Eurasian continent with Africa itself and trying to establish them over America as a global power. And what they're doing is that they're creating these billion-dollar military bases in these countries that they know can't pay for it. Great example is Sri Lanka. They built a multi-billion-dollar military base in this small-ass country in the middle of the Indian Ocean, knew they wouldn't be able to pay for it, foreclosed on it essentially, and then took over land, and now China occupies part of Sri Lanka. They've done that in Sri Lanka, Kenya, Djibouti, and all these countries that they know they can't pay it back. And as a result, they're just capitalizing on that. And that's very scary. But I mean, it's also what America did originally to gain power in the first place. So it's not we haven't seen that per se. Right. But it's definitely to say that China will be a dominant power. The whole thing is that China is going to be the dominant power of the world for the next, well, maybe not the hegemon, but they're going to be the hegemonic stability between the US and China for the next few decades, perceivably. And there's obviously money to be made there. So we just got to find a way to capitalize on that. And maybe it's not Chinese stocks, maybe it's something else, but that's definitely need to be had if you want to make a lot of money.
Yeah, I totally agree.
And I think that's the way to do it.
I agree. I think, China is certainly transforming into a world superpower. But I'd also argue that America is still where people want to build businesses, right? I follow a lot of entrepreneurs on Twitter, and a lot of them, actually, I'm not sure you guys know Pipe.com, but Harry Hurst is from England, I believe, is where he's from. And he built Pipe.com, which was the fastest fintech company to reach a $2 billion valuation. And it's only a year and a half old, and it's incredible. And he came to America to build it, and he's hiring people who are leaving India to come to America to work. They're not going to China to work. They're coming here because not only do we have favorable, right now, we have favorable long-term capital gains taxes on after IPOs and things of that nature. I don't know if that's going to change under the Biden administration. But I just think right now America is poised for, it's a capitalism. And if you want to, and obviously capitalism and money is what a lot of people are focused on, especially if you're building a business, where I think it's a little bit different in China, a little different with communism. And so I think that, yes, China is definitely evolving. And I think the number one thing that catches my attention is the talent. You cannot ignore the incredible talent in China. I mean, for every one person that graduates with a STEM degree in America, there's 92 in China, right? And those people are working for Nio, they're working for DiDi, they're working for these really cool companies that are building. And yeah, I wish I had a cool answer. I wish I knew this better to be yeah, do this or do that, but I have no fucking clue. I'm just over here betting on America.
No, yeah, I honestly agree with some of your opinions on, consumer and what you should invest in is what you know. So I definitely respect that opinion that you have. So
yeah.
Plus, their population is massive. They have a 1.4 billion population compared to America's 333 million. So kind of go back to your point, one to 91. Yeah, it makes sense to why there would be
I
that
just
many
pulled it up
more.
my ass, by the way. I have no idea what the real
Yeah,
numbers are on that,
it
but
is though. It's pretty high. It's definitely not 191, but it's like it's higher, we'll say, than the United States. Um, but yeah, it's just it kind of goes with everything else. They have a massive population. Their government's massive. They have a massive overreach to their population and their businesses because they're communists. Um, and I think that's going to be a huge driving force, like you said, to actually bring businesses to the United States. And I think that's why we'll always be fine. I think as long as we can keep capitalism up there on our priority list. And as much as you know, because you're an entrepreneur and you've invested money, you're in companies, you own companies. The government has their hands in them a lot, but they don't have them in as much as communist countries. And I think that's what's going to keep, as long as we keep it that way, that's what's going to keep driving businesses to the United States. Fingers crossed it works out like that. But that's my thought on it.
So quick rebound off of that. So yeah, obviously capitalism it works. Like we've seen that the last 20 years. But I'm obviously again pro-American. I'm not betting against America, but you have to hedge your portfolios, whether it's crypto or any other way. But the only thing that I'm concerned about with our country is our education system. So like what Austin was saying is that it seems at least that there's a lot more intelligent people in China than there are in the US in regards to those STEM degrees that you're talking about. But our education system has been broken for a while now, and they don't really seem to be doing anything about it. And then you can argue that our political system is also broken because there's just so much controversy between both parties, and they're just continuing to divide. And I just think that we need to get that resolved for I don't know, for a better future for our country, because if you can't have a cooperating, like a good cooperating education system, then all these different generations of people that are coming out of the US, then they're not going to be put into the right direction for success, in my opinion. And I think we should prioritize that for our country. Again, this isn't a political podcast. I'm sorry for bringing that up. But
So that's
yeah, I don't know. Just education.
It's funny you said that, John, because that's actually I think personally, it's a huge misconception on what separates us from China. If you look at, yeah, it's fine and dandy. If you look at the way the education systems work, they're not opposite, obviously, because the end goal is education, but the way we get there is a little different. I think the main thing that separates us when it comes to growing in education in our younger generations, look at the divorce rate. Look at what parents are in households, both parents are in households in the United States compared to China. Like they pride themselves in China on family and being there and teaching and growing from a very, very young age, whether it be in education or life skills or whatnot. The United States is totally different. Totally different. The United States takes capitalism and throws it at kids at a very young age because they see their father going to work, and I'm going to throw myself in that category, going to work 15 hours a day, coming home still working, being on the computer working, and that's what the American child grows up with if they're growing up with their father or mother. And that's just, I think if you do more research into that, it'll kind of open your eyes and you'll be like, wait, maybe it isn't the education system. Maybe it's starting at home with these people. And it's actually the parents' fault, maybe why the United States and the American citizens aren't as, educated as the Chinese citizens. That's my take on it.
Education's also relative because,
Oh,
I
absolutely.
mean, in terms of the U.S., you were just talking about, Josh, we were taught capitalism from like a very young age. Everyone on this podcast is like a through and through capitalist. A lot of my friends are through and through capitalists. Everyone has that driving working mentality. So the American dream, even though I do believe it's like gone, it's not like a real thing anymore, and theoretically it was an illusion to start off in the first place. It does keep a lot of people motivated and driving, as we can see with these massive companies from startups back in the 80s, like Microsoft, Apple, going on, like Amazon with Bezos. There is that you can become whatever you want in America, which is necessarily the same with any other country in the entire world. And to that point, until that longevity is circumvented, I don't think America is going anywhere. Like regardless of like all the M1 money supply is out of control because we're printing so much money, declining foreign treasury holders, like whatever. When it comes down to it, in the end, we have that ability to climb the ladder as far as you see fit and as far as you can drive yourself. So until that is circumvented, I don't see America going anywhere. I really don't.
I hope not. I hope we don't go anywhere.
Yeah, that'd be great. I live here.
Yeah, that would be ideal. But last section of the podcast tonight, I wanted to talk about crypto a little bit. And Austin, you probably see this coming. But you got into Chainlink, dude, so early. So like, I just want to know, like, how did you discover Chainlink? Where did that conviction come from? Was it just looking through their white paper, their website? Were you already invested into crypto? But like, how did Chainlink come onto your table, and like, where did that all start? If you want to tell us a little bit about that.
So I'm not gonna name where I found it because it's like fuck. All right, so
TikTok, wasn't it?
It was Wall Street.
No,
Bets.
dude, this was back in 2017.
Twitter.
No, it wasn't Twitter either. So I was in Bitcoin back in like 2013 or 14. I bought a couple Bitcoins so I could trade them to some Chinese company for some fake IDs, right? Like everyone else did. That was cool. Since then, I've had those IDs either confiscated or destroyed. So that was ripped to the 4 Bitcoin that I used to have. But long story short is I was definitely like I understood cryptocurrency and I like understood like, oh, Bitcoin's a thing. Like this is cool. Like, back in like 2013. And then back when I was in college, I think it was 2016, I saw Bitcoin hit like $1,000 or something, like $1,200. I'm like, yo, it was just like $80 when I bought some of it with me. My friends got these fakes. Like, why is it like 10x? Like, this is stupid. Like, why didn't I buy more? Like, can I, like, And so I tried to convince my friend to go in with me on doing this and then buying some Bitcoin and like just rolling this out. He decided not to. I said, fuck it. So I had a couple $100 laying around, bought as much Bitcoin as I could. I was washing cars at BMW's dealership at the time on Saturdays, part-time in college. So I mean, I didn't have a lot of money, but it was money that, whatever, right? So got as much Bitcoin as I could, then rode that wave. And then throughout that process, I obviously in 2017 and 2018, Bitcoin peaked at like 20 grand, and all these shit coins were coming off left and right, and Ripple was going for our XRP. It was like not even a cent to like $3 and something, and then like we had Ethereum and we had like Bitcoin Gold and Ethereum Classic and EOS and all these like old, probably like even and Monero and like these dead cryptos. Yeah, nowadays that you guys probably, or maybe the listeners like, oh yeah, maybe I've heard of that, but like back in like 2017, like that's all that mattered. But so I was on Reddit trying to figure out, what's going on and this and that, and I'd found a person who posted a hyperlink to something on 4chan, which is a disgusting website that sucks. But the people that hang out there are really smart. And so I was poking around on through that hyperlink to another hyperlink and sort of like the rabbit hole, right? And it took me to this long thread on 4chan of some guy talking about Chainlink and how he thought it was going to be this revolutionary thing. It's going to be all this cool stuff. He like work for banks and they're talking about it. And this is like back like 2018 when people were like, I don't know, man, crypto's crashed now. Like, Chainlink's at like 25, 30 cents. Like Bitcoin's back at like 4 grand. Ethereum's back at like $90. Like shit sucks. And I was just poking around. I read this like, dude, this guy's got a really high conviction for it. Like I'm game, and I've got a couple grand on my savings account. Like let me buy as much Chainlink as I can. And so I tossed I think it was like 6 grand into Chainlink, which turned into lots and lots and lots of Chainlink, and I haven't sold a single one since. And since then, Sergey has been doing some incredible stuff. They've they've got their SmartCon conference coming up, but like. I mean, they have over what, like 600 integrations, over like 50 different blockchains and all these other different cool, like they're crushing it, dude. And I think it's like the only crypto that's gone from like 20 cents to $20 in a bear market. Now we're back around the $20 mark, but it's sort of frustrating seeing it go up and down and be stagnant and whatever. But at the end of the day, it's like we're just waiting on staking, and I'll be able to stake my Chainlink to sort of pay me in sort of like a passive income type deal. But yeah, so long story short, found Chainlink through a Reddit thread that hyperlinked me out to a 4chan thread, and then I just started poking around into like what that guy was posting, and it was pretty interesting to see. And Yeah, that's the answer. I got lucky, dude. That's the long story short. Is I got lucky as shit. I was so lucky to find this, and I obviously have done probably 100 hours worth of research on this stuff, and I mean, I've really, I understand this Chainlink, I think, more than any other projects, cryptocurrency project out there. But I now know, like, and I'm so comfortable having so much of my personal net worth in on this, and seeing it go up and down and be volatile. I remember it going from the first like 45 cents up to $1 after the mainnet was announced on in like May 31st of 2019, and then like Google talked about leveraging them, went to like $1, and then like Coinbase listed them, went to $4, and it came back down to like, I remember it was like $1.25. I was like, fuck, $4 to $1, like I lost all this money. And I'm like, nah, what, like let me just forget about it for a couple of years. And it went up to like 9, then 20, and then 50, and it's like, it's wild, man. So we're riding the wave, we're having fun, but at the end of the day, shout out to whoever red pilled me on Chainlink way back in 2018.
So in 2018, what was like that main thing that got you to invest so much money in a new project like Chainlink?
Yeah, so reading about how so I understood very well the problem that Chainlink was solving, right? So like we have how I try and explain it to people, and maybe people listening right now aren't familiar with it or even what smart contracts are. Imagine Bitcoin and the blockchain, that the technology that Bitcoin has brought to us is like the computer, right? But a computer is very useless without an operating system on top of it, with applications that are built in the operating system. And so that's Ethereum, right? So Ethereum is this operating system built on top of this computer where you can have PowerPoint, Microsoft Word, Microsoft Excel, or whatever else, or even Google Chrome. But how useful are these applications, these decentralized applications built on Ethereum or any other blockchain? How useful are those without real world data interacting with those applications? Well, they're not useful at all. And so Chainlink, Sergey Nazarov and Ari Jules and all these really cool people that work on Chainlink came from these incredible backgrounds, and they understood everything that as it relates to building to solve this sort of Oracle problem. And so after doing just a fuck ton of research and like looking through and watching old interviews and reading as much as I could online, and it's like all these rabbit hole threads on 4chan and Reddit and Twitter, wherever else I could find it. I was like, you know what, this is really, really cool. And I feel like every person at one time in their lives like makes like a big bet. And for me, it was like 6 grand. Like, don't get me wrong, like it was a lot of money for me. It was like pretty much my entire savings at the time.
Yeah.
I remember like I was like, fuck, why'd I do that? Like, that was stupid. But yeah, I just feel like everyone makes a big bet once in their life, and that was mine. And fortunately, it paid out.
So
So let me ask you this. Do they have any competitors? Like I obviously like if you rehash to the dot-com bubble, we didn't see Facebook come out until years after that whole dot-com bubble came out, and obviously now they're one of the biggest companies, biggest tech companies in the US. But I was doing some research on their competitors in this like Oracle niche sort of thing and what they're trying to do. But there's just like such a wide gap between Chainlink, and then I think there's like UMA, Band Protocol. They have like a $200 million market cap. Chainlink's got like a $6-7 billion market cap. But like not like I just think that Chainlink is just so well accepted now, and they're just adopted into this system that they're not going anywhere, in my opinion. And I just simply don't think that there's anyone else that can just compete with them at this point. And I'm sure you might have a perspective on this, Austin, because you are the expert on Chainlink. You are invested, but what do you think?
Definitely not an expert. Shout out to Chainlink God on Twitter. He's the massive expert. But no, they don't have any competitors because, yes, there's Band or there's whatever the fuck else. But at the end of the day, what is a Oracle supposed to do? It's supposed to secure value for smart contracts. And the lowest hanging fruit right now for that is decentralized finance. And I'm on Twitter right now trying to find a picture that I had a friend tweet, and I can't find it right now. But long story short, it broke down. Let me just go to DeFi Pulse, DeFiPulse.com. So if you go to DeFiPulse.com, you get to see the top 15, the top whatever DeFi platforms and how much money is locked into their platforms. Aave, for example, is 10 billion. InstaDApp is 8 billion. Compound is 7. Curve Finance is 7. Like billions and billions of dollars. Chainlink, of the top 10, which of here, let's say that's about $20 billion. No, way more than that. 30, almost $40 billion is a lot of value in decentralized finance is locked in these top 10 sort of protocols. Chainlink secures 8 out of 10 of those. So these protocols realize that Chainlink is the only solution for price feeds that are decentralized, where there won't be slippage, there won't be any sort of downtime, or what is it called? I think it's called downtime, where it's like, I'm sorry?
Gas fees?
No, not gas fees. Well, they are doing that with off-chain OCRs. I think it's like off-chain recording or something, but that's different. But no, it's like like for example, I'm not sure if you guys see this or not, but it happens a lot where you can take out like these flash loans and then sell it back to the exchange, and like it moves the price ever so much, where like it liquidates people, and then like when they get liquidated, more people get liquidated, like a short squeeze, and like then you make all this money. It's like these. It's not a hack by any means, but it's a way to like sort of abuse the lack of technology to make sure that these things don't happen. And so Chainlink fixes that like 100%. And so that's why there's tens and tens of billions of dollars of DeFi money locked into protocols that are powered by Chainlink, as well as the other 600 integrations they have. But so does Chainlink have a competitor? Yeah, you could say Band Protocol is doing something similar, but they're not. It's like Squarespace or Wix versus Shopify, right? It's like, yeah, they both exist, but I'd argue Shopify will piss all over Squarespace any day of the week. Just like you can look at Shopify's market cap and look at Squarespace's, it's like it's this, it's nothing to even have a conversation about. So yeah, dude, I'm excited to see where it goes, and I think trade finance, and then it goes to event, if it's like crop insurance, if it's logistics, if it's like whatever. Like there's so many like really cool real world event triggers that can happen around this, and then obviously derivatives and things of that nature. Yeah, man, I'm just rolling the wave here on Chainlink, and whatever staking comes out, hopefully by the end of this year, I'll be able to take on my Chainlink, stake it, make some sort of yield on that, and live off the interest. We'll see.
So
So Austin, obviously, this is just a stupid question to ask you, but I just want to hear your bold prediction, all the viewers as well. But you're just saying how Chainlink is essentially like the most trusted Oracle network in DeFi, and they're not going anywhere. Where do you see this market cap for Chainlink going if we do witness this paradigm shift into money and banking, where blockchain technology is accepted, and we see this Web 3.0 transfer as well, where it's either like a decentralized, centralized sort of network, and obviously Chainlink is going to be playing a huge role because they are the Oracle that's basically running all of these different projects. So what kind of market cap could we be looking at for Chainlink by maybe decade's end or over time? Like what's your bold, very bullish thesis on Chainlink?
Yeah, man. So like at the end of the day, Chainlink's market cap increases as people use the Chainlink token or the Link token to secure, I guess, to pay for data as it relates to a smart contract. And so as more and more data is paid for through this ecosystem of, powered by Chainlink, then that's what increases the market cap. And I have high conviction that there's going to eventually be right now there's tens of billions of dollars of not leveraging. Well, I don't think they're leveraging the price feeds in such a way that they have to pay for it, but it's like money locked in. But long story short, to answer your question, I would argue that the Chainlink's market cap would eventually become north of 100 billion, hundreds of billions, in a 3, 4, 6 year time frame.
Think we could see a trillion ever?
I mean, fuck, dude. Like I don't know. I mean, so what? I know that that Sergey has talked about derivatives, and that's a $4 quadrillion market. And so if even a fraction of that ever gets secured by Chainlink's oracles and price feeds and sort of smart contracts that leverage Chainlink to do that, then perhaps. But I think that's very, very bold, and we're not going to see that for decades. But relatively speaking, I would love to see Chainlink hit $100 billion market cap within the next 4 years.
That'd be awesome. The only reason why I say trillion is because I think that investing in crypto now, like these specific projects like Chainlink or whatever gems you find at an early stage, like what you did, it just creates a generational wealth transfer for generations of your family. So like a $1 trillion market cap for Chainlink, I think is a like a $2,300 price target, and that would set your family's generations and generations for a long time, and that would just be something amazing if I could like have my kids be like, oh yeah, like my great grandfather is like this guy and he invested into Chainlink this early and we're set for life because of it. Like that would just be really cool.
No, I totally agree, man. That'd be awesome.
That'd be awesome. That's why I invested into all my crypto, actually. It's for my kids. They're not going to touch my retirement, my long-term portfolios and the equities, they get the crypto money, and if it tanks and fucking goes down to zero, they get nothing. If it goes to millions, they get all of it. So that's the way I look at it.
They can't go to college.
Yeah.
Yeah, fuck them.
So a quick question for you, Austin.
I paid for my own. They can pay for their own too if it goes to zero.
This is just like a broad question, but what do you think is the best wallet out there for you to hold all your crypto in one place? Because I know you can have your Coinbase, you can have your Voyager, so many different like Binance where like you have to go to different apps or different websites. There's the cold storages as well with ledgers. But if someone is just a consumer like my age who doesn't have a lot of money into crypto, so they don't need to put on a ledger and they're just looking at their phone, where could they look at their crypto in one place that you best recommend where they can just add their wallet addresses to this platform? Like what's the most trusted platform that you would recommend?
So the platform I've used since 2017 is my Ether wallet. MEW. It's my Ether wallet. It's just it's like an app. You can have it on your phone. You can have it on your computer. You like two-factor authentication, all that fun stuff. That's where I keep 90% of my crypto portfolio. Obviously not Bitcoin, but 90% of what can be stored in there. But I've seen myself now using Celsius wallet a lot more. Because the interest rates were really like interesting. I was like, I didn't know you could like earn interest on your crypto. And then like Celsius like, yeah, we'll pay you every Monday. And I'm like, the fuck, like that's cool. And so like now I'm getting paid on a weekly basis, a percent of the crypto that I keep in that wallet, which is right now close to like 40 grand. So that's really cool. And yeah, but if I guess it really comes down like what you really care about. If you're really into like, let me earn interest and make as much money as I possibly can, as quick as I can, then like, yeah, use Celsius wallet. It's great. It's also secured by Chainlink, which makes me feel really good. But if that's not your cup of tea, BlockFi is great. Coinbase wallet's great. But what I would encourage you not to do is keeping your money on any type of exchange. If that's Binance, if that maybe is like just the Coinbase hot wallet inside the app versus the actual Coinbase wallet app. But just get your money off exchanges. I'm not saying that any exchange is going to get hacked, but it's always a possibility. If it's not your keys, then it's not your crypto. You guys probably heard that 100 times. And that's why I keep a lot of my crypto where in my own wallet, on my Ether wallet, where it is my keys, my crypto, my stuff.
Awesome. And any hidden gems, or not hidden gems, but you found Chainlink very early. Is there any projects right now that are at a lower market cap than Chainlink that you have a lot of conviction for that you want to share to the audience? Where they should dabble into research, not just taking your opinion, of course, but put them in the direction.
Yeah, I think the only one right now that has sort of caught my eye recently is the Graph, GRT, and you mentioned that earlier in this podcast. Let me find it. I wonder how low they are here on this. Yeah, so they're number.
I was actually just talking to Caleb about the Graph the other day. That's funny.
Yeah. So they're number 49 on here, and they're about 55, 56 cents per GRT token. But yeah, so generally speaking, like what they do is if you're a blockchain developer and you're trying to build a dApp or whatever on any blockchain, like it takes a lot of time to build one from scratch. You have to understand transaction volume. You have to understand, finding the data, the information, like building it from scratch, right? It's like, let me just go fucking code an app from scratch. You don't. You use Figma, right? You use I don't know. Like you use tons and tons of different like resources as a tech entrepreneur to help you like build something. And so imagine the Graph as one of those supporting productivity tools to help people build on top of blockchains. And so what they do is they say, hey guys, let me make all this blockchain data searchable. Well, they index it and then they make it searchable so that developers can say, hey, if I want to know this specific data, or I need to have these specific check marks to build my DApp, that I can go to the graph, I can pay a very modest fee, I can find that, which will save me hours and hours and hours of manual labor doing it myself. And as more and more people, imagine how people analogy it is. It's like the Google of blockchain. And you can just search Google for something online. You can now search through GRT or the graph for something on any blockchain to help you find data to build quicker and faster. And so, at the end of the day, and we didn't really touch on this in the podcast, but how I try to invest is I don't bet on specific projects or companies or things of that nature. And yeah, stocks, obviously, yes, but I guess at the end of the day, it's like Roku is a really good example of this. I'm not betting on Netflix. I'm not betting on Disney Plus. I'm not betting on HBO Max. I'm betting on streaming, which is Roku, right? Roku allows people to stream. Roku owns 40% of smart TV operating systems by market share. They're the people who are enabling streaming adoption. So by investing in a Roku, I'm not betting on a winner in streaming. I'm betting on streaming in general. By investing in Chainlink, I'm not betting on Compound, Nio, Tezos, or Avalanche, just these whatevers I see on my screen right now, these individual projects. I'm betting that on overall, blockchain technology and smart contract technology, you will need real world data to succeed by building on any of these, by building any dApps on these blockchains. They need real world data. Let me invest into that general initiative. Same thing with the graph. It's like, I'm not betting on people that are building the next thing. I'm betting to enable them to build the next thing. Like I'm giving them the resources. And if I can invest into a project who's giving people the resources to succeed, that's pretty cool. And so I think like that's just a general, investing strategy that I've used throughout the years, especially as it relates to crypto, because who fucking knows what's going to happen with projects on crypto. But yeah, that's my answer. GRT.
Yeah, and I'm like the same exact way with my crypto. When I do research on crypto projects, I try to find out if there's any use case for them for this transfer into Web 3.0, because I'm in strong belief that I think that we are going to eventually get out of Web 1.20 and transfer into Web 1.30. So I look for projects like that, and decentralized indexing, like you said with the graph, it's required. It's a required piece of decentralizing web infrastructures. And then again, how I have a very bullish case for them, like you did with Chainlink, is there are no other projects right now that I'm at least aware of that are aiming to decentralize the work of indexing blockchain data. And like that's why I like the graph a lot. And yeah.
100%, dude.
I agree. I got a lot of Chainlink too, and I've had it. One of my first cryptos I bought was Chainlink. It was Litecoin and Chainlink, and I've sold my Chainlink a couple times just when it was like hitting like $35, $50. I sold it and I bought back in again at, I think my cost average is like 650. Like when it really dipped. So I was, pretty happy with that. But yeah, Chainlink's one of my highest conviction for crypto. So I like everything you said.
Very cool. Yeah, no, I wish I had the balls to like buy and sell this stuff. I remember I only done it once and it fucked me, dude. I lost like time to market, and I always read online like, dude, like don't swing your chain link, like don't swing them, dude. Just like accumulate them and roll with it. And I was like, nah, fuck that. I'll have time to market. And so I tried to do it on the mainnet launch. So like you look over at EOS, whenever they launched their mainnet, there was a massive sell off. I'm like, okay. Well, if that launched mainnet, it sold off. And I think there's another example of a mainnet that launched, it sold off. I'm like, Chainlink's got to do the same fucking thing. It'll sell off. Sold a bunch like 88 cents. It was like $1.60 the next day. I'm like, fuck. And so I'm over here trying to buy them back and accumulate. And but yeah, I realized very quickly, like, do not sell Chainlink. Just fucking accumulate it, stake it, and live off the interest.
Yeah, the only crypto project that I trade that I'm going to be holding a long time is BNB, simply because it's just so easy to swap into BUSD, and I hold a decent amount of BNB. They're basically monopoly, and they might see a lawsuit with the SEC after XRP is over, and I'm aware of that, but I'm going to be hodling a good amount. But I'm a swing trader, and like I'm pretty decent at technical analysis, I would say. Alex is too.
It's bonkers to see.
It's so easy to trade though for BNB.
Binance. Yeah, wait, where are they? Yeah, Binance. Yeah, it's number 4, dude. It's bonkers to see there. And so I remember actually during what is it? This this crypto bear market back in the day, watching everything bleed to zero and seeing Chainlink like kind of gradually move up. And I was like, who else is doing this? There's nothing else doing this. I'm like, oh shit, like Binance Coin is doing this. Well, why is that? And as we know, Binance Coin gains value from people using Binance's exchange, and there are people trading on Binance exchange despite whatever price that crypto's at, because people trade for a living and people I mean, it's a very clear example of utility. And no, I totally agree. I think Binance Coin certainly, because yeah, if you guys don't know, people listening, the utility around Binance Coin is it gives you 50, I think it's 50% off, but it gives you a fuck ton off of fees on trading fees on Binance's exchange. So if you hold BNB in your wallet, you can elect to pay your fees in BNB, and when you pay those fees in BNB, they're like cut in half. And so it's just a good idea to buy it and own it and use it if you're a trader. And yeah, it's interesting, dude.
And
And
then
then just one more thing before we get off. I know Caleb,
he
he wanted to ask you about this, and I'll just try to reemphasize the conversation. But there was a recent FUD article about Chainlink. If you want to talk about that, Caleb, and then ask Austin your questions about that article in regards to the whales or the whales.
Ah, yeah, I remember that.
Oh yeah, it's all over TikTok right now. Everyone's like, oh, 80%, 60% of the top 10, or just 80, 60% of the total supply is held by like top 10 wallets. And then it was like disproven. It's like literally just like the entire team that's holding it. It's like utility like measured out like that. And it's actually like the biggest whale owns less than 1%. So I'm curious like your thoughts on that at large. And like honestly, the bigger question is, what's your thoughts on a lot of these like bigger crypto TikTokers that are spreading a lot of like misinformation?
So to answer your first question, I think when Chainlink had their ICO, they said that there was going to be like, fuck, hold on, let me look and see the numbers. So I don't want to say anything stupid. Let me see. Okay, Chainlink right here.
Just say it. I say stupid shit all the time. It's fine.
As you
Pull it up, but
So there's
quickly,
right now.
you go.
My bad. I was gonna say so right now the circulating supply is 440 million Chainlink, and so at this very beginning, I remember the circulating supply after the ICO was 250 million Chainlink. So that was like the ICO, right? It's like, here's all, 250 million. That's going to raise us our $32 million seed round so we can go build this company. And then with that $32 million, they've built into whatever it is today. And so the 250 million was sold to the public. And so then they kept, because there's only going to be 1 billion total Chainlink. So that's another 750 million. And so they said, we're going to keep, I think it was keep 300 million or 350 million, one of those two or something like that, to fund future growth for Chainlink, which they've sold, obviously, because the circulating supply has gone from 250 million now to 440. So that's whatever the math is, almost 200 million Chainlink that the team has sold out to put into the ecosystem to fund their growth. And I remember last summer, maybe the summer before, they were selling like 7 million Chainlink every week or something. And people are like, oh my gosh, this is a lot. But at the end of the day, you think about it like, you got to build a company. I understand. And so like, and then the other bit was actually going to be given to whatever that delta is, the 300 or 325, whatever the delta is on that million Chainlink, was going to be given to node operators and other sort of data providers to incentivize them to just build out the ecosystem until people were using it in such a way that they would pay for the data themselves. And so it's funny though, like if you look back and think like, okay, if that's true, if the top 1% own however many 68% or 70% or whatever Chainlink, that is not even the team, I believe it, because I remember very vividly going through these threads online and seeing people post their screenshots and be like, dude, I was only able to buy 48,000 Chainlink before it hit $1. Like, I feel like an idiot. Or this guy's like, I know, dude, I was only able to buy 192,000 Chainlink and I was only able to get 212,000 Chainlink. And I'm like, what the fuck are you guys talking about? Like, looking at it now, I'm like, you guys are so fucking rich. I'm not even near that. But what I'm saying is like, I would argue that there are people out there that are very, very smart and saw this coming back in 2017, 2018, 2019. As you guys might know, there's a guy that's named Ass Blaster. That was his kind of funny name, but that was like his anonymous name to sort of tip people off on like what was happening with the banks and Chainlink and things like that way back in the day in like 2018. But there are people out there that are anonymous, that are whales, that have hundreds of thousands of Chainlink that they bought for under $1, under 50 cents likely, because they understood what this was going to look like. And I'd be surprised if any of them sold. And again, there are a bunch of node operators that were given a lot of Chainlink, which I'm sure are all identified and all have like, you can put names on their wallet addresses. And I'm sure the chain, I don't have like the what's it called? I'm not on Etherscan or Ether Explorer right now to give you guys numbers, but I'm sure the dev team at Chainlink still owns hundreds of millions of them. And yeah, but so I'm not. Oh, and so I think the main thing was like, oh, it's supposed to be decentralized. Like it's not. It's centralized because so many people own it. That's not actually at all like what the because if you think about it, like okay, so the reason why Aave or Compound Finance or one of these DeFi protocols uses Chainlink is because they're an exchange, right? And they allow people to take out loans against on the collateral and things of that nature. And what happens is these people get liquidated if the price of the loan to value ratio, uh, exceeds a specific number, right? So, like for example, if you have $100,000 in Ethereum, you put it inside of Aave, and you want to borrow now $50,000 worth of USDC against your Ethereum, you can do that. But the second it goes, the second your value in Ethereum drops so much that, let's say it drops 50%, now your loan to value ratio went from 50%, right? 50,000 out of 100,000 to now 100%, which is, 50,000 out of 50,000 in value. And that's like, yo, guys, like that's a margin call, right? And so what happens is on these exchanges is if you don't have decentralized price feeds, then people can take out flash loans to go to Aave and sell $30 million worth of Ethereum in 2 seconds, bring down the order books in such a way that it liquidates all these people, and then they're fucked. And so like, and so why Chainlink solves that problem is because instead of saying like, oh, the price of Ethereum for 2 seconds came down from $1,000 to $500 and then back up to 1,000 as the order books filled it back up. But it was just for that specific exchange where everywhere else, the price of Ethereum was still $1,000 because that's the true price of Ethereum. It was just negatively impacted on this exchange by this flash loan. What Chainlink does, it's like, hey, fuck your flash loans. We're going to get 32 different price feeds across 49 different, or no, whatever, 32 out of 32 different data providers. So people can't flash loan and can't fuck over other people like that by manipulating the price over a 2 second, 3 second time span to have their own financial gain. And so like, is Chainlink decentralized? Absolutely. I would argue there's like 40 or 50 different node operators, 60 different people who are pulling data feeds and price feeds across a bunch of different places to make sure that Aave, to make sure Compound, to make sure all these other cool, Celsius, all these other cool places. Maybe Aave is not them, but you guys know what I'm saying. Like these decentralized finance protocols are being properly given their prices. And so what is centralized, I guess, are the people that own Chainlink, which are just smart fucking people, but that doesn't at all impact the ability for Chainlink to decentralize data across the dozens and dozens of people who are providing it. So the data is still decentralized. People who are paying for the data still comes across from tons and tons of different integrations, right? 600 plus integrations, including Microsoft Azure and Google and all these other cool things that we were talking about earlier. But what is centralized, even if you want to even put quotations around that, are just the smart fucking people like myself, haha, who bought a bunch of it now, or who got lucky like myself, very, very soon and got a bunch of it.
Wow. I mean, I'm gonna be watching this podcast after it's over just to like consume what you just said. But we've been doing this for a while now, and I feel like it's a very long episode. But Austin, dude, thank you for letting us pick your brain, man. Like you said a lot of factual things on this episode, and I think it's really going to help us not only help us grow, but I've learned a lot. I'm sure everyone else sitting in this WebEx call has learned a lot from you. And you're a genius. You're very successful right now. You're young. You're just going to continue to grow and grow and grow and accumulate more opportunities for yourself to, I don't know, produce and capitalize on and just continue to build out a network. And I don't know, a lot of people look up to you, man. So like I hope you guys are watching this and appreciate this episode. But I'm gonna be putting Austin's Stand With Me link in the YouTube description. And I might just make that a requirement for everyone that comes on this podcast now. Get everyone into the Stand protocol and get them involved with John because he's a great guy. But his link's gonna be in here, guys. If you want to see his Patreon or all his other things that he's doing, everything's there. You can DM him, like he said, on Instagram. But you guys have any... Yeah, of course.
Yeah, no, I was just gonna say I appreciate it. And those words are insane to coming from you, and I really I'm humbled. And I'm definitely not as crazy cool as you guys might think. I'm just a 25-year-old trying to make some cool content online and just get people investing towards their futures, or at least talking about it. And if anyone has any questions, shoot me a DM, and I'd love to chat and talk and get the ball rolling.
Yeah.
Yeah.
Do you
guys have anything else to say to Austin, or are we?
Yeah, thanks, Austin, for coming on. I enjoyed talking with you, and I think I'm gonna learn a lot from this, and I have learned a lot. And I hope in the future you'll come on again. I think it was awesome having you on.
I appreciate it. Cool.
I appreciate you a lot, Austin.
Yeah, thanks, man. We look in the graph more now. Maybe throw a Hail Mary bet like you when it gets down to the bear market and see how it pans out.
Love it. Sounds good, boys.
Now's a great time to get onto the graph, just a cost average.
Nah, yeah, give it a few months. Give it to like the 2018 time in the bear market when it drops to like 5 cents. That's when you throw all your money in the graph.
September is going to.
I'm bullish on the fall. I'm bullish on the fall for crypto. But that's an episode, guys. Thank you for watching this. If you watch this entire thing, sub to the channel if you're just joining or you haven't subscribed yet. We're going to be having Invest with Russ on next week. Another great guy. We have a lot of guest guys in the pipeline that's coming for the podcast. We got him. We have Atticus from Asset Entities. We have the Average Investor. He's going to be coming on. But we're just going to continue to provide value and content to you guys on this YouTube channel. We our audio engineer right now, Luis, who's going to be seeing this video and editing it. He is currently getting us on Spotify, Apple Music, all these other podcast outlets. So if you don't want to just sit on YouTube, you can also listen to the audio version as well. But this is just the beginning, guys, and very honored and humbled to have Austin on again. And
have a good day, guys.
Have a good day, guys. I know you have a baby shower, gender reveal to go to, but
oh yeah, for my friend. Yeah. All good. Cool. See you guys. Appreciate it.
See ya.
Hey, see ya.
Peace.
See you, Austin.
Next Sunday.